In today's video, we're talking about the DXY, the euro, and the pound as we approach that key Fed rate decision. In fact, we're just 2 hours away from it as I make this video, so I'll have all the details in this video as far as what to watch on these markets. And the US dollar, guys, is sitting at a very, very critical level just hours ahead of that event. So not wasting any time, guys, let's get into this video here. We're looking at the DXY monthly time frame first. And you can see where the DXY, off of that 2011 low, we do have this ascending channel that we've discussed many, many times on this channel. So looking here at the DXY, obviously 96.60, this is going to be a big area for this market. We've discussed this for the past few weeks and really even months. And you can see where this is a very well-defined ascending channel. Okay, so parallel channel off of these highs up here going all the way back to 2009. So for the DXY, this is obviously a key area for the US dollar going into that Fed rate decision. Now, one thing that we've noted here in the previous videos is the fact that when the DXY bottomed back here, you can see it was very similar price action to what we're getting right now. Now, I am not saying, guys, that the US dollar will bottom here. We don't know what's going to happen. I don't know if it's going to play out similarly to what we got back here or not. But the bottom line here is that you can see the low right here. We had the market return to that low and then finally bottom. It ranged here for several months before we finally got the DXY breaking out. Now, this could break down, okay? But the bottom line here is that as long as the DXY is above this support area around 96.60, you have to be really careful here with the US dollar, especially if you are bearish the US dollar going into FOMC. Now, what you'll notice is looking at the daily time frame, okay, we did have the DXY break, at least it looks like, break slightly below this 2011 channel support. So if I draw this level from 2011, and mind you, this is going back to 2011, it's very, very difficult to get a diagonal level, correct going back that far, at least exactly to, this kind of precision. But if you draw it off of this low from back here, what you'll notice is that on Tuesday, the DXY did close below. Now, here is the issue with this, though. First of all, this is a level that goes back to 2011. Really, you're looking at the monthly and weekly time frames. The daily, yes, you could confirm something here with the daily, but it's really difficult, especially going into that FOMC. So the mistake a lot of traders make is they see this right here on the daily, and they think, okay, this is broken down. This is now resistance, which it very well may be. But at the same time, like I said, trying to confirm a breakdown on the daily time frame of a level that goes back over a decade, just hours before a Fed rate decision, guys, that is not what you want to be doing here. If the DXY does bottom down here this week, then we're looking at a range-bound DXY. Okay, so that's the bottom line here for the DXY right now, is instead of looking at this and trying to figure out, has it broken down? Is it going to hold? Just wait for the dust to settle, guys. Wait for FOMC to pass. Wait for that volatility to calm down and then go from there, because there's always going to be second and third chance opportunities to get into a market. You don't have to enter right before an event like FOMC. In fact, doing so, guys, is always ill-advised. So in my opinion, guys, best to wait this out, see what we get here from the DXY in this area over the coming days. But the bottom line here for the DXY is that this is a critical support region for this market. It has taken out those two poor lows that we've discussed in recent videos. So this was a key area for the DXY to come down here and take those out. That's happened, and now it's just a question mark of, does the DXY hold this support area down here this week, or do we get the market finally breaking down from that 2011 channel support? Okay, but really critical area here, guys, nonetheless, for the DXY. But I am going to wait this one out, wait a day or two, and just see what we get here from the DXY, because, here's the deal. If this is a range-bound market, and I want to mention this before we go into the euro, is that even if this is a range-bound market here for the DXY, right? Like, let's say that the market does hold support down here, there's no sense in trying to front run today's move, because if this is a range and the market's going to bounce from here, then really this right here is your range, right? And so you've got all of this up here to work with, to the point where there's no sense in trying to front run this and, risk your capital right before FOMC. You're better off just waiting to see what we get. If it does hold, then you've got all of this real estate to play with up here. If it doesn't, then you've got all of this real estate to play with down here, okay? So looking at the EURUSD now, let's move along here, guys. And by the way, if you guys want to join us in VIP Discord to see my trades in real time, also get VIP-only videos and also real-time market updates in Discord, plus full access to the course, be sure to check out the link in the description of this video for lifetime access to that. You're going to get 85% off. If you're on the website, click on that Join VIP link. Okay, so the EURUSD, guys, is pressuring a critical level as well. Now, this doesn't quite go back as far as the one on the DXY, but you can see where off of these highs and lows, going back to 2022, we have this equidistant channel. Now, this was the level that was tested earlier in 2025. So mind you, this is a weekly time frame. This right here is what we saw the euro reject from earlier this year. and it's right back to that level at 1.1880. Okay, so we discussed this in yesterday's EURUSD video, and you can see where so far, right, I have not touched this level. And if I zoom in, notice where on Tuesday, it hasn't been a significant pullback, but notice where the market topped out here. Okay, so a little bit of selling pressure coming in here from that area, but the bottom line for the euro, like we talked about on Tuesday, is that this right here, okay, this up here is going to be your resistance area. You've got this area between 1.1880 and 1.1910. So this up here is going to be your resistance. You've got support coming in down here at these recent highs off of the closing price back here. Also, all of these highs through here down around 118. Okay, now maybe just a little bit lower. Also keep in mind that we do have that February trend line that sits just below this area as well. Okay, so really for the euro, you're looking at a range going into FOMC. This is your resistance area up here, this entire region, and support down here in this region. Okay, so I am not going to sit here, guys, and say which way this is going to go. I'm not going to talk about whether or not this market is going to break higher or lower, just because I don't want to get you guys in trouble. Like I said on the DXY, the best thing to do with situations like this is to wait the FOMC out, right? Wait for the dust to settle and then go from there. Because even if, right, let's say that we get a breakout higher. Let's say we get a bullish breakout above this area up here around 119. Well, these highs back here, right, these equal highs, if we get a breakout above here and the euro can sustain this, then you're looking at this imbalance all the way up there toward about 121. So you got all of this real estate up here to work with. And the same thing goes for a bearish move, right? If we get a breakdown here from the euro over the coming days, there's no reason to try to front run this thinking that you have to get in before FOMC to catch the move, because here's the thing. If this market does break down below here and break that February trend line to target areas like this, then you've got all of this real estate to work with, right? So you've got all this real estate to work with down here in a bearish scenario. And then you've got all of this up here to work with for a bullish scenario, right? So bullish up here, you've got bearish down here. In my opinion, everything between here is really just kind of no man's land. Yes, you can try to trade the range, but I don't advise it before FOMC. Okay, so that really, guys, in a nutshell, is what I'm looking for or looking at here for the EURUSD going into the Fed rate decision. Now, looking at the pound, obviously the market is rallying above 135.80. We've talked about this before, but back here when the market was pressuring this area, I did say that a breakout above this area did look likely to target some of these key areas. Now, for the pound, the one thing that this market has going for it in a bullish sense is that you've got this breakdown that occurred back here in July. And we've discussed this many times, but this breakdown right here was so volatile that you have three single prints up here. So the first one being 136.86, 137.14, and 137.30. So those are going to be the areas to watch, guys, going into FOMC, because areas like this often serve as so-called magnets for a market, just because you have these imbalances that occurred back here that have not been quote-unquote filled in, okay? So that's what I'm looking for here on the pound. I do think we could see some higher levels here going into FOMC, but the issue there, guys, is that, again, you have that volatility from FOMC, you have the widening spreads, etc., right? So trying to trade this hours before a Fed rate decision is always a bad idea. We could see a little bit higher here up into this region, but keep in mind that this up here is going to be key resistance. And even these single prints through here, guys, are also going to serve as resistance potentially if we see the market take those out. All right, so pretty simple there for the pound. And obviously, if we do get the market breaking above that high up there, currently right here at 137.50, if we were to get a sustained break above these highs over the coming days and weeks, then of course that would open up higher levels. And the first one being up here, if we go all the way back to this level, this is actually a monthly level up here, right around 138.70 or so. Okay, 138.80 or so. That's going to be the next area if we do get the break above these highs up here. However, at the same time, you've got to trade what's on the chart. What is on the chart right now is a range-bound market. And, don't forget too, when you're looking at the pound, don't forget to watch the DXY. Because even though you can sit here and look at the pound and say, okay, we could be headed much higher here, that is true. However, you need the DXY breaking that 2011 channel support down here on at least a weekly closing basis, if not a monthly closing basis, to really confirm that upside for the euro and the pound. Okay, so once again, guys, just to wrap up, let's take a look at this again on the monthly time frame, just to kind of show you the significance of where the DXY is sitting right now. It is sitting at that 2011 channel support. And again, I'm not going to make the call to say that the market is going to bounce or it is going to break lower. I'm just going to wait for the market to tell me what is likely. I don't want to enter before FOMC, and really you should not either, because through experience, guys, I know that these events can be incredibly volatile. And even if you do get the direction right, the spreads can widen to the point, even on the major currency pairs, to the point where you're getting stopped out prematurely or the chart has time to run in your favor. All right, so I hope that helps, guys. If it did, be sure to subscribe to the channel, hit that like button. Also, join us in VIP. Check out that link in the description for 85% off lifetime access. Trade well, be safe with today's FOMC, and I will talk to you again tomorrow.